Welcome back. Good morning. Hope you guys had a great weekend. And let's see if this market can get out of its own way. So we all know the Fed, whether you know or not, big, which could be potentially a big Fed announcement on Wednesday. I think pretty well thought out, I would say, that the pressure has to be growing on them to recognize the inflation concerns that are out there, where they say that it'll dissipate. They didn't say there is none. They just said it'll dissipate. Whether they're right or not, we shall see. So there's a lot of uncertainty, and the markets have just been in a rather tight range and erratic and schizophrenic. I like to use that word over the last year or so. And so the price action has been that, especially, at the end of the day on Friday in that last 15 minutes, the buying into the close, whether it was short covering or they committed to buying. I don't think we can ever really know for sure. But anyway, that buying into the close suggested higher, and markets, as you can see, I've got the futures over here, SPX over here. Slight bit of a rejection at the moment from those all-time highs again. And so we'll see if this continues to move down. Here's the 5-minute chart, just trending down a little bit, just picked up a little momentum there. But it's still right at the top of the range here. So, from a 5-minute chart perspective, it's in a downtrend, and from the daily, it's in a sideways trend. Well, I guess we can call it an uptrend with no momentum, since it did make a new all-time high, which is basically running in place, going nowhere. So SPX levels, these are going to be important levels, especially this 42.25, which should be like a solid floor. And this is going to expire on Wednesday. So we got the Fed coming out, and we've got this options expiration. And this is a big cluster of open interest there. But just look at the levels here, 42.20. I mean, that alone, even if we didn't know, we know for sure that we've got all of this support, this cluster of congestion in this area. And while I'm not going to bring it up here to look at it, if any of you are using something like Market Profile and you applied it to your 30-minute chart, which is what's typically used, or on this 60-minute chart, you're going to see pretty much that point of control is going to be somewhere around here, because these are where the bars are overlapping, and that's where the trading took place. So depending on whatever tool you use, you can use the simplicity of MTS and look to the left. You can use open interest. You could use Market Profile. You could probably use volume profiles, and who knows what else. The focal point of the majorities are going to be in this area. Now, the fact that this has gone up, and this is in an uptrend here, the expectation is if it can clear these highs, it's going to go higher. Voodoo lines. Okay, so I guess we got like a guy out there with bones and who knows what to, call the levels. Anyway, there's all kinds of weird stuff out there. And there probably is such a thing as voodoo lines. Who the hell knows? I mean, the marketing geniuses out there that'll, guys, they forgive me, but I have to say it as it is, take the sucker's money. I guess we've all been there at one time or another when it comes to the markets and thinking that there's some magic. I certainly was. I didn't, I don't say that from the point of view that I avoided it. Anyway, big levels down here. So we're at whatever this lines up with the S&Ps coming into this bar a little bit, no big deal. So if it should come down into this area rapidly, it's probably going to get a big bounce from there. We'll see what happens. It was a $10 million buy of 4275 SPX calls expiring at the end of the month. Trader McGraw saying 42.75 calls. All right. Well, maybe that's what pushed things up in the last 15 minutes. I mean, we shall see. If it goes down, I suppose somebody's going to lose a huge chunk of money, but they got till the end of the month. We'll see what happens there. Right. Just can get through the highs. Anyway, so I would just looking at where the premiums are and things going down here a little bit. You want to go above 42.50 as high as you can and get some premium. And, ideally down here should be a no-brainer today, somewhere in this area. Let's take a look at the other markets. So you see where the futures are at, just kind of going sideways here. And a little gap, we've got the expiration on Friday. So new contract being traded. If you're not aware, you have to change your contract, which you should have done Thursday or Friday. The volume starts moving over on Friday. So you got new contracts and a little pop up, a little going nowhere, a little narrow bar, in a downtrend, going nowhere. Okay. The Dow. And I wrote about in the letter that, the way this has been trading, really I talked about the cash Dow, topping tails going on after breakouts, rejection up in this area, bearish 180 reversal. It tries to go up and a topping tail. And so this sideways congestion that's been going on in many sectors and the broader markets, you could say is it, that's distribution. And there's no doubt of that. However, it doesn't break down. And the weekly's in an uptrend. But there's flies in the ointment, as I wrote, meaning, we had the transports break down last week. They turned around on Friday. And if they can make a miracle bounce up into here, maybe we start thinking, maybe it's just a downside shakeout. So we're looking for more information. Rotating, Caterpillar, 10% so drop in a short period of time. So all these institutions are hitting the bid at the same time, and they're believing. I guess what we don't know, but look, they're rotating money out of some of these sectors. We mentioned wood a couple of weeks ago, right? Topping out. This is starting to move lower. Oil's not moving lower. Looking at some other commodities, they're not moving lower. Maybe lost a little bit of momentum there. Wheat, I guess correcting a bit there, but oil staying up. So we got to keep an eye on interest rates, the financials. They took a little bit of a shellacking on Thursday. With interest rates moving down, transports moving down. You've got that breakdown in interest rates, TBT. We talked about this head and shoulders top beginning to form, and now it has broken. So there's these issues out there in the market, but the market's holding up. And suppose Wednesday or sometime Wednesday should be the big day, or going into this end of this week, where the markets start to move out of this range. Now, up until then, well, the Qs are up here, right up, knocking on the door of a new all-time high. XLF, that looks like it should keep going up. So as long as it does, Q should make new all-time high. Right? The S&P made a new all-time high, and IWM is up at the top of the range. And there could be biotechs, which look pretty darn good near the end of last week, can show some strength. And you got the financials and the regionals not doing so good. So maybe that keeps this in place. But, if you've got regional banks and biotechs doing well, the Russell will do well. So maybe those are two neutralizing forces. Let's keep an eye on the regionals and see if they can recover a bit. So these are moving up. Looking at the futures there, they're holding up here. So, one of my thoughts over the weekend was, especially as the way S&Ps moved up in the last 15 minutes, all of these near all-time highs. I mean, they push up to new all-time highs. We get new all-time highs in the Qs. The equally weighted Qs made a little peekaboo to new all-time highs. Where the triple Qs didn't, but triple Qs probably coming if tech does well. Maybe Apple pops up, and maybe some of the underperformers, and we get Qs making all-time highs, and S&Ps doing better, and the Russell doing better. And if transports don't turn around and interest rates stay down, one of my thoughts was suck a rally. Our internals gave sell signal 2 weeks ago. There's a lot of stuff that's getting beat up. We're just chopping sideways. Accidents happening. I use that term. So things like Caterpillar. So the broader markets always mask. They always mask what's going on under the surface. And so you need to know where to go look. So you might think, the internals gave us this heads up 2 weeks ago. Meanwhile, the market's a new all-time highs. Well, as you start looking through all different sectors, like this, and you start looking across the board at all S&P sectors, and you see, well, oil's doing okay. Oil's up there. And you see industrials pulling back. Tech still looks good. I wrote about this Discovery and the other one. Maybe they're going to pop up this week. They're in this sector to help push this to new all-time highs. But financials coming in, materials doing nothing, consumer discretionary broke down, just hanging out here. Staples going sideways. Now, healthcare was one of the stars last week, especially this coming back as it did, and this real estate doing well, and maybe utilities if interest rates can going down, this is going to perk back up again. So keep an eye on that. And just going back here, we look at each day. Bonds are down a little bit, but they broke out of the range, and interest rates going down. And same story there. Oil continues to push up. I mean, if you've been putting gas in your car, I got whatever relatively large tank, but I guess a few months ago was $50. Now it's $70. So food prices going up. The security company, I was telling Dan over the weekend, we kind of like saying, yeah, there's no inflation out there, right? Well, this whole debacle that this administration is creating here, whether it's intentional or not, with shutting down pipelines, but these stimulus checks, and we all know, you hear, hey, there's so many jobs out there, but they kept pumping that money up there. And so now we get a letter from a security company that handles the security here. We're going to have to raise the hourly rate because we can't find any help to find people that want to work. And I guess maybe that's the way that they're going to push up, through underlying forces, minimum wages. I don't know, but there's inflation stories everywhere. Gold coming in here, I guess ahead of the Fed meeting. They're uncertain, what are they going to do? Right on the 200, but it had a nice run. Silver coming in as well, but in a trading range. And well, you should know that, the dollar started picking up a little bit. The euro rolled back over. So look, there's all of these underlying forces that are say, hey, be careful. The markets are pretty much just chopping sideways, different sectors, money's rolling into, and it just seems like, maybe this week between the options expiration, the Fed meeting, that the culmination of all of this sideways going is going to reach its inflection point. ask the internals here. So these that we typically look at are about where they were when we got the warning signal. But this long-term one actually pushed higher. And this moves really, really slow. And that pushed up to an extreme. And this one is the equity put call ratio. And that's moved up to an extreme. So there's lots of red lights out there. But for us that are in the markets every day, we are aware of what's going on. Our responsibility is to protect our money. Right? We get involved in an accident. Right? Well, our money management and position management will save us from disasters. And that's why we do this each day, not to get caught with, being the deer in the headlights, watching our funds evaporate. All yours, Dan.
Good morning. Hope everyone had a good weekend. Yeah, Sam, I posted Square actually as a put spread candidate. Nice gap. Elon Musk is on a Twitter tear again, messing with Bitcoin again. Actually, we've been writing put spreads, naked puts in this. And I said in the weekend video, this is actually a beautiful turn. That was over the weekend even. These are new bars. So it definitely looks like a nice short-term bottom here on the daily. We had Riot in both letters. Riot, I wanted a directional. We were going to buy calls, and then we were also going to do a put spread. And look, I mean, that's gapping up $3. That's 10%. I can't chase that. But I'll put it in a little window here. And so Square, yeah, it's another one of those. Mara, obviously, Mara looks similar, but I like Riot just a tad bit better because it cleared this, but they're both very similar. Square, sloppy turn here, but it moved up 50% retracement. Red bars ignored 20 and 200, and now it's gapping up. So yeah, Square looks like a great. I don't like it really as a directional, but put spread for sure. Yeah, right. I saw that thing gap down. This was when they came out intraday and gave a going concern exception or warning rather that they're going to run out of money. That's the kiss of death. I mean, we were long it actually, but from good prices. A week trail stopped down and a profit. Okta, bottoming pattern. It's worth watching. Paul Tudor Jones, the billionaire hedge fund guy, had a nice 30-minute interview on CNBC today. He's a smart cat, and he's again just trashing the Fed. He's like I forget the words, but it's like just friggin' out of control. I don't know if he said that about the Fed or the markets actually per se, but yeah, he's totally disagreeing with what the Fed's doing, as many people are, but the other point I want to highlight is he thinks this Wednesday Fed meeting is batshit crazy. Yeah, whatever. Was he talking about the market or the Fed or both? But yeah, he's very smart. But anyways, my point I'm leading up to is he thinks it's going to be a very, very important meeting. Alarian thinks the Fed's lost control. They put themselves in a box. And then I can't believe I heard Jim Cramer come up with an admission saying, I totally support everything they're doing. What? So everyone has mixed feelings, but I've been bashing them for months, way before the bandwagon has joined. APO. Yeah, I actually was watching this for a week or two and got tired of it. But yeah, APO is a breakout watch, absolutely, Jose. AYX. The 123, not a great price void. They more of a put spread to me. And then, yeah, Mara, we already talked about. Sure. Mara looks good. Right, there's nothing to do with race. Race gapping down 203 and change. That's an ADR. That's Ferrari. No great pattern. AMC. We'll see if the Reddit boys are going to come out slinging today. Hey, what is this? Where are you? The Corsair thing, whatever? CRSR, I think it is. CRSR? Yeah. Yeah, I think it's this one. I think there was a mention on, wow, that's a big gap to 42. Wow. Yeah, CNBC was speculating that maybe this is a new Reddit toy, but there's no pattern. We like to trade the Reddit toys with our methodology, obviously. Prawn, we are long stock. Nice little gap up. Although MJ, the sector's flat, Tilray looks back, so our Cron is doing good. ENOB, 11, wow, it's more than doubled. Nothing to do with that. Wish. Day trade maybe. Day trade. I'm not crazy about the daily. SPWR is a solar. Not bad. I actually have Run, RUN, on my watch list too here. Run is a put spread idea. Tan. Yeah, I think I told Greg I think Tan might be a it's a monthly buy setup. This might be a core trade. So what we're recommending is sell $70 puts and then take assignment. And yeah, Corsair. Yeah, Corsair. That's the one. That's the toy. MDIA 578. I don't like the way it trades. NVAX is in the news. Something about, I think the headline said 90% effective, their drug. 224. No pattern. It's going up vertical. Bravo Zulu. I guess an IPO on Friday. I don't know what they do, but I like watching IPOs. Greg mentioned Cat, and I mentioned to Greg once I saw Cat. I'm like, wow, where were we? We should have, when Cat showed weakness, and this is why I always go to the cousin, right? Coke, Pepsi, Home Depot, Lowe's, beer, Cat, and look, that little exercise on Wednesday would have got us a beautiful, beautiful short setup here. You had a bear, somebody knew something here. Gap down, topping tail, breakout failure at the 20, bearish 1, 2, 3 on the weekly, climactic monthly. That we gotta watch that thing. Short of bounce. OMC, kind of this is like a long bullish consolidation. Daily, weekly. It reminds me, McGraw, of our, where are you? We did a put spread on it. In my open positions, because I'm in it. It reminds me of VMW. See that? See how, well, weekly not the same, but just a long multi-week bullish consolidation. So we have a put spread on this one. Greg, CMG, beautiful double bottom. We were going to put, in fact, I put a screenshot in the weekly options trader. I said this would be just a textbook fantastic put spread over yesterday's high, but the spreads were ludicrous. I got an upgrade today, but it could turn into a long. Let's keep an eye on that. Sport watch. Possibly, just riding the elevator back down. It's still, Peter, it's still a bullish weekly and monthly and sector. Al, same answer. JR, G Pro. Yeah, I think that the only problem is, I don't know about the target, but Tuesday had a beautiful igniting bar, 3 inside bars. Yeah, so that's my only question is the target, but put spread under Thursday's low for sure. Par is in the weekend ladder as a put spread. And if we get a 1, 2, 3, I like that also. We're in GE. I saw that got, wow, that was a nice pre-market. Car alarm just went off actually. Not the car in your Volkswagen, but the car in stock. Ron, I'm in this too, long stock. I'm just checking out call options. If there's anything for the 950. Yeah, 950. 16 cents. I'll take it. Back into a covered call. Yeah, car looks great.